Hi, and welcome once again to Finance Solutions TV. In this episode, I'm going to explain what term assurance or level term life assurance is. It's actually one of the more straightforward plans to explain, as it works on a very simple principle. You insure yourself for a particular amount of money or a particular term at an agreed premium which does not change during the term of the policy. So for example, you would insure yourself for, say, €100,000 over 20 years at an agreed premium of €15 per month. The amount, the term and the premium are all fixed. If you die during the term of the policy, the amount you've insured yourself for pays out. In a situation where there's a joint policy, you'd insure yourself on a dual life basis, meaning both people are covered equally, but independently of each other. So what does that mean exactly? Well, using the example we have given already, of €100,000 over 20 years. If one person dies and the policy pays out €100,000, the other surviving partner will remain insured for the duration of the policy. If the second person dies, another €100,000 would be paid out. So let's apply that to a real life situation, and I would always recommend this cover for a family. Imagine a scenario where your spouse passed away. You, the surviving partner, would be in receipt of a lump sum to help you replace the income they were previously bringing into the home. And the lump sum could be used to cover day-to-day expenses or for one-off events such as children's education, holidays, etc. Very importantly though, you as the surviving partner will remain covered too, so should something happen to you, your children would be in receipt of this payout if you died. There are all sorts of other factors to be considered when working out a financial plan for you and your family. But level term life assurance will always be at the centre of it because you have absolute clarity about how much you are covered for how long, and very importantly, how much it will cost each month now and into the future. So having given an explanation of the basics of this product, you may have also heard the term indexation or inflation protection, and also a convertible option or guaranteed cover again. So taking those individually, firstly, indexation or inflation protection as it's also known. As mentioned above, the premium will remain at the same price for the duration of the policy. The only time this would change is if you have indexation added to the policy as an additional benefit. What indexation does is increase your cover every year so as to protect yourself against inflation. If you imagine the value of €100,000 now against what it would be worth in 10 years' time, for example, then obviously it won't be worth the same. So the indexation benefit ensures you are protecting yourself against inflation every year. Of course, the flip side to that is as your cover is increasing, the cost is increasing. But both increases are fixed every year and you'll be notified well in advance of any increase being applied. The second benefit I mentioned was the convertible option or guaranteed cover again. This option allows you to convert your cover to another plan at any stage throughout the term of the plan. But the key point is you do not have to provide any further medical evidence. So again, using the example of €100,000 over 20 years, if nearing the end of this policy, you've decided that you wanted to keep some of this cover in place, maybe the children are reared and you've decided you wanted to have cover to protect each other and ensure you are comfortable in retirement if anything happened to either of you. With the conversion option, you can take out some or all of the benefits applied in the original policy without having to provide further medical evidence. Again, think of the practicality of this. Most of us through our lives will experience some medical conditions as we get older that would probably have a bearing on whether we get life cover at all, or that may well lead to a loading of the premium. The conversion option is a way of protecting yourself against this into the future. I have not discussed the major additional benefit that can be added to term assurance in the form of serious illness. I prefer to refer you to an episode where we cover this specifically for a clearer picture of what this feature can protect you against. But for now, just be aware it is a benefit that can be added to this type of policy. But again, I refer you to the website to that episode on serious illness cover. I hope that's given you a good insight into what level term life assurance is, what it covers, and whether it's suitable to your needs. For further information or for a brochure on this, please don't hesitate to call or email me. Once again, many thanks for watching Finance Solutions TV, and I look forward to seeing you in the next episode.